Hello everyone, welcome back to another video with Ray Finkel. My name is Ray Finkel, not really my name. And this is just a trade breakdown that I was discussing with someone on Twitter, and I decided I will do an in-depth breakdown as to what it is I'm looking for in this particular trading model. Now, this is a very, very simple trading model working out of 4-hour supply and demand zones and waiting for a 15-minute Quasimodo pattern, getting in at the .702 Fibonacci, targeting a risk to reward of 2 to 1. That's it. Simple, 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 simple. Now the first rule is we obviously want to be in accordance with the trend. You can see we've got our high and our low, higher high. We can anticipate our lower low, and the lower low we will anticipate is going to occur in and around this here demand zone. So whenever I'm marking out demand zones, the first criteria that I want to make is that I want to see that this demand zone had an expansive move away and ultimately went on to then break structure, which you can see it did here. Perfect. We also want to see, or at least I want to see, that it takes some form of, it stops out quite a lot of traders before making the expansive move. It kind of cleans out the house, takes out a lot of traders, and then moves away quite aggressively. Brilliant. So I've seen all that criteria met here. I would have marked this out, set an alert just above it, wait for price to come in. Whenever the alert goes off, I drop down to the 15-minute, and then I wait for the Quasimodo. And that's essentially all this is. So let me break down the Quasimodo for you here. Okay. So we can see this is like clean, 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 clean. This is like a super clean example. It happened on EU, and this is a trade that I took back on like the 3rd or 4th, was it? Yeah, the 3rd of November. And it's essentially this. We can see we come into the demand zone. We've had our first move off, okay? So we could say we've put in our low, and then we've put in a high. This is where the buyers tried to push the price up, and then they got all taken out. So I would mark out this level here. I would take this whole candle here, and this is the supply zone that put in the new low. And I want to see something occurring in here. We'll get into that in just a moment. So the first criteria is, now you're going to see this pattern happen a lot. It happens everywhere across all time frames. And in this example, this is what it essentially looks like. We put in a low, we put in a high, we take out those lows, we take out the highs, .702, see you later. That's essentially it, right? It's kind of like a tap, a deviation, a tap. If you're familiar with my trend trap reverse model that I'm actually at the moment attempting to optimize, because I definitely think there is a lot of potential in that, it's kind of the same thing, because you've got your tap, you've got your trap traders, you've got your third tap, you have your large move away. This is essentially the pattern that I play over and over and over again, but it has to be in the context of, it has to be at a key reference level of either support or resistance, whether that be in the form of supply or demand, naked points of control, confluence between Fibonacci's and VWAPs, whatever it may be. I have to see this occur at a particular region or point of interest. That's essentially my whole gig, essentially. So, tap, deviation, tap, gone. But what's interesting about this is, right, you have your first tap in, and the context is that the market structure in the 4-hour is bullish, so I'm only looking to take longs. We're in a key reference level, being the 4-hour demand zone. We have our initial tap and our move off, okay? We've seen that low get taken, and then we see the high get taken. But what's interesting, or at least it's interesting for me, and it's something that I really need to see now, and before I would have been happy just seeing the high get taken, then I would have got involved. But I have to see, whenever we come back up into this supply zone on the 15-minute chart, we want to see an exchange, some sort of like a battle between the buyers and the sellers. In this instance, you can see we've come up into this area, which pushed price down, which put in a new low. We've come up, we've had a bit of a battle. The sellers tried to push price down, and then the buyers stepped in, took them all out, and ultimately took out this initial high. Brilliant. That is the check mark that you need. I should say, this is not financial advice. This video was just made for purely for entertainment and educational purposes only, okay? So we've come up in here and we've put in this high. We haven't put in this high. We've come up into this supply zone, and then we've seen a rejection, and then the buyer stepped in, took out this high, and took out the initial interaction. This is where the key area, this is where the battle happened, okay? Once I see that, we've put in a low, high, taken out the lows, we've had a battle, and in this battle we've also resulted in taking out this high that we put in when we first tapped into the demand zone. Amazing, brilliant, so clean, perfect. Now, even though this is a very clean description of what it is we're looking at here, this is how it will normally present itself. It's never going to present itself in such a clean and obvious way such as this. It does happen on occasion, but more often than not, it's going to be disguised in all of this choppiness that is occurring here. But ultimately, what's happened is we've done exactly this. Low, high, here's that low, here's that high. We've taken out the lows, taken out the lows. We've taken out the highs, we've taken out the highs. .702, Fibonacci, and let me just show you this. This is the level I like to get in at. And we'll just expand that out a wee bit. Okay, that's where I would have got in. And the reason I like to use the .702, let me just show you my settings here. I'm not too sure if I have already. This is the settings that I use, my 0, .702, 1, and then my -1 fib, okay? The -1 fib is if I want, if I'm feeling ultra bullish, sometimes I'll close out at 2 to 1, and maybe I'll close like 80% and leave 20% to run, and that's essentially my overall target will be the -1 Fibonacci, but that's for another time. So what I like to do here is I like to see this battle occur. We come down into the .702, okay? And then the reason I use the .702 is because in doing so, first of all, I'm increasing my risk to reward by getting involved here. I also like it because once I enter in there with my stop just below that low, if I'm targeting this high, it's always going to be in and around a 2R risk to reward. If you want to set it at a 1 to 2, then that's perfectly fine and be slightly more conservative. Or you can at least target the highs and you'll always get a wee just a fractional bit more than a 2R risk to reward. And that's essentially it. And it's incredibly simple, but yet it's incredibly powerful. There's a number of things that we have to see. This pattern, again, has to occur, but what's the context here? We're working out of a demand zone. The 4R market structure is bullish, so we're only looking to take longs. We've seen the highs and lows get run inside our key reference point. We enter in at the 702, stop below the low, we target at least the highs, and you can see that would have hit here, and that would have been it. Or if you want, you can close out 80%, move your stop. You can manage it however you want to manage it. But what I like to do on occasions is sometimes I like to leave, as I said, close out 80% at 2R and then let the rest run. And then just trail a stop. And you probably, we would have been still in that trade essentially. So that is essentially my supply and demand. It's very simple. It's not something I created or come up with myself at all. But again, it's telling you a whole story. You've got your lows and your highs. The market is cleaning house by taking out the initial longs and then taking out the initial shorts. So it's stopping out the vast majority of people before making the larger move. That's essentially the context around this particular pattern. That's why I like to use it so often. It's also, if I was to draw out my range fib, if price is consolidating in a range, then I'm using the same type of framework. Let's say we put in a high and a low, you get a deviation of the highs, you get back in a third test, and I'm looking to go short. That's essentially how I like to trade ranges. So it's the same type of pattern. Your tap, your deviation, your third tap. You've got the trap traders. It's just wonderful. Like the context of having trap traders is something that's very important to me. I want to know where people are trapped, essentially, because if they're trapped, that means their position is underwater, and they're going to have to do one of two things. They're going to have to either cover their position, which was going to result in this situation, it's going to result in more buying pressure, or they're going to have to get out of their position, which means they're going to have to buy it back, which is going to add to the buying pressure. So I like to see key areas, and that's why you like to see me mark out levels such as my naked points of control, or my session naked points of control, and things such as this. Like you can see here, look at this. We've got this is coming up from, drop down to the 5 minute that we see here. So that's essentially what a naked point of control is, and that's why it's so important to me, is that, we're not going to see it here, are we? 15 minute again. The naked points of control is showing you where price has moved away quite aggressively from where the most volume was transacted. And you can see here, we've got this London session, naked session point of control, expansive move up. Perhaps so there was some news event there, but ultimately we come down to, we got a nice bounce off of this previous London naked session point of control, and that's essentially telling us that in this region here, that's where there was a lot of buying and selling interaction. That was the largest volume was occurring in that price level. So when price revisited, anyone who was caught in the wrong side of the market, essentially trapped traders, what they're going to have to do is they're going to either want to get out break even, and they will thank the gods that it didn't take them out, and they will get out of break even, or they're going to have to, as I explained before without repeating myself. So that's why I like to use naked session points of controls. It's essentially all the same thing. I'm looking to identify where areas of price that's going to have a lot of trap traders, and then I'm going to look at trade away from them. And the reason I'm trading away from them is because when they're wrong, they're going to have to do one of two things, like I've said previously. So that's essentially it. I hope you find this informative. I hope you find this entertainment. I hope you find it entertaining. I do enjoy doing these videos now that I've made a couple. So if this is something that you enjoy, let me know, and we can maybe dive deeper into some context. Look, I'm not some educator. I'm just some guy that's bought Bitcoin way back when it was very cheap at £75 on local Bitcoins. That's what really got me started. And then I sold essentially at the top of the $20,000 bull run, purely by chance. And then that kind of got me interested. So I've been doing this for a number of years now, and it's kind of become somewhat of an obsession of mine. And I've learned quite a lot. So if you find this beneficial, you want me to share some of my ideas, then go ahead and slap a like, subscribe to the YouTube channel, and we'll see how it goes. I have zero desire or to build this to become anything but just a place where maybe I voice my own opinion. But if other people are finding this beneficial or entertaining, or maybe you just enjoy watching these types of videos, then yeah, look, I'll happily continue to do that. It's not something that I ever considered. I just threw out a video last week, and yeah, some people watched it and some people enjoyed it, and yeah, it is what it is. So let me know your thoughts on that, and I will talk to you all very soon. Take care now. Bye bye then.